Monday, May 20th, market analysis, Stan Ehrlich. I start out with the indexes, E-mini, QQQ, NASDAQ, Russell, go to the futures markets, and I'll be sharing the charts with NinjaTrader first and then TradeStation second. Still have some data feed problems got to resolve, but I can make it work with both platforms. E-mini, testing the high of last Thursday, which was at the time a new high for the whole trend, but we seem to be stalling out a little bit. And now for 5 days in overbought conditions. Possible double top. In fact, relative to last Thursday and today, it looks like a little tiny double top over a 3-day period, 3 trading day period, plus over a couple of months, when the last important high was April 1st. So month and a half, potential double top. Of course, you need to go all the way down to 4962.75 in order to break out of the double top for the larger formation. So I'm looking at resistance. I'm looking at overbought conditions. And all I need now is a bearish engulfing in order to get a red ER sell signal, an official sell signal. Does not look particularly likely to go all the way down below yesterday's low. We've seen it happen before, you know, surprise, surprise. All of a sudden things fall apart because of some piece of news or whatever. So a bearish engulfing today would produce a bearish signal for me, and I've turned bearish for the correction I've been looking for way too long. We're looking at the 1-minute chart on the E-mini. Stalling out very, very close to the high of last Thursday. And so far, hanging in there pretty good. Next chart's a spider, grandfather of the E-mini and micro E-mini, of course. And we have well into new high ground, but a gap. Last week, we gapped up. Gaps are almost always closed, so I'm expecting a move back down to the high of around 523.30-ish, and that was the high that we made on the 14th of May, 4 days ago, Tuesday to Wednesday of last week. That gap, I think, is going to be closed. If it stays down and keeps on going down after closing the gap, we could have that double top formation. We could have an exhaustion gap, but it doesn't look like it at the moment. So downside correction, we'll see what happens. It's critically important if I'm going to get more downside follow through for the break to stay down and keep going down some more. But these are the exact conditions under which those kinds of things develop. But they have not yet. Don't jump the gun. You got to be bullish with some bearish reasoning, expectation, but there's no bearish trigger being pulled. Looking at the 1-minute, 5-minute S&P 500. I would think that the very, very first signal is going to be getting below 530.50. That's still not good enough in my opinion. I need to get below 527.25. That would be a lot more interesting because then you would have a bearish engulfing if it happened today. Official sell signal. Next chart, QQQ. Now the Qs are high and last, again making new highs for the whole trend, again overbought. Practically everything is overbought, but nothing is reversing, nothing is slipping much. I haven't got any signals. Premature to think that I'm going to go short immediately. I'm looking to, but I haven't got the signals. If I was long, I'd be raising my protective sell stops. If I wanted to go short, I need a little bit more technical evidence before I pull the trigger and go short. Next chart is the QQQ 5 minutes. Again, dipping down below 454 is going to be the start of something maybe, but the real kicker here is the beginning of something is going to be below 449.50. That's going to be an outside day if it happens today. And again, high and last, it certainly doesn't look like it. NASDAQ futures, new high for the trend as you would expect, but not by much. It's very, very vulnerable. All of these indexes, they could have very, very quickly a bearish engulfing. Next, we've got the NASDAQ 5-minute. Again, I need a move down just for starters below 18,729 3/4, but that's not the really important low. It's the low on Friday. That one, if you get below 18,544, you're going to start a bearish engulfing and probably a major sell signal and a double top. Next, Russell. Daily chart did have past tense a good, so far, not great, bearish engulfing sell signal on July. Wait a minute. Hang on. I'm sorry. I'm looking at the wrong data. I'm overbought in resistance. I had pushed everything to the side here. I forgot about that. So we're in a resistance area and overbought, and that's about it. Perfect conditions for a bearish engulfing, but we're pretty much high and last. We're not quite above the high of last week like the other indexes, but the Russell is in a major area of support, resistance. So I'm looking for everything to turn down, but it's not starting yet. The Russell 1-minute chart, almost high and last. Let's go to the YM Dow Futures Daily candlestick, about where it opened, about the high of Friday. We did make a new high for the trend up, very, very close to the previous highs, which were a major bear signal on April 1st. Great. Worked excellent. All the way down to, you know it, a bullish buy signal at the bottom on April 19th. Now we have a false or not a good sell signal on May 13th. Got stopped out the next day, or at the very worst, the day after that. Small loss, flat, but overbought, possible double top, looking for sell signals, haven't got it yet. And the YM 5 minutes, disregard those blues, we'll get rid of that quickly. Now bonds. Bonds are doing what I thought they might do. They've pulled back into the channel. That was on the close on Friday. We've made lower lows than Friday's lows. We're currently trading below Friday's lows. We're currently trading below where it opened. So we got a bearish day in progress, and we're nowhere near oversold or at support. I think this market's going to come down to 115.17, maybe 114.11, and I cannot rule out the bottom of the channel sometime in the next couple of weeks, 111-ish. Then a big bull move. I'm looking for one more downside correction in the indexes and bonds, interest rate futures. How about notes? Notes are sitting on top of the previous channel, but the resistance line did stop it cold at 109, close to 110. Actually, the high of the rally was almost exactly 110. Was it exactly 110? One half a tick from it. So lower low for the last couple of days. I think it's going to drop back into the channel, and I'm looking for a dip down at least to 108.15, probably challenging the ballpark of 107.13. And I can't rule out the bottom of the channel sometime in the next couple of weeks will be below 106. Next, we've got soybeans. Almost a new high for the trend. The ER buy signals and sell signals, ER trading system, ER signals, got 4 out of 5 of the grains at the bottom of the market. Beans is one of them. Double bottom formation, green bullish engulfing, April 19th, got the bottom. We are almost making new highs since then. I'm expecting a rally up to at least 1269, up to 1281, a little resistance there. And I'm not ruling out by any stretch of the imagination getting up to 13 plus. 1250 almost at the moment. Bullish on beans and basically grains. Soybean oil did not create, unfortunately, a bullish engulfing in the last couple of weeks when the last shoulder low now looks like it may have finished developing. Okay, ladies and gentlemen, It was way back when we were starting to test the support area around 44 on the way down, and it was April 30th. I started talking about this beginning to be a low and maybe a shoulder low. Now, this is the last shoulder on a very large head and shoulder bottom. The first shoulder low was a 2-week situation back in July of 22. Then we had a couple of weeks where we bottomed out, creating the head of the formation in May of 23. Now in May of 24, I think we've got a last shoulder low. It's a gigantic, that's one thing wrong. Most of these formations are a few months to maybe up to a year. I don't see very often head and shoulder tops or bottoms that are 2 years or larger. They exist, they have happened, just very rare. So what have we got? New highs now since the last shoulder lows. That implies the shoulder is in place. That implies we're going to rally up to the next resistance level, 50.50 or 46.40 at the moment. Almost high and last. Up we go. This is so bullish, I don't even want to talk about it at the moment. Let's just see how it handles 50-50 if it can get up there to begin with. I think it's going to. Next chart is soybean meal. It already bottomed out with an ER buy signal on February 29th. All downside corrections never made new lows. At a major support area, we have made weeks ago higher highs by a long shot. We have had a downside correction that tested support I talked about for the last week. Now we have a bullish engulfing outside up day, bullish engulfing candlestick. We're almost high and last at the moment. And I think the lows are in. I think we're going to challenge the high for the rally at 389.90. Let's call it 390 flat. And next stop after that looks to be approximately 401.5 and higher. Corn. We bought the bottom of the corn market to the exact day with the signal on February 26th. We have made new highs for the whole trend just last week. We have had a downside correction, which was back to a little bit of support, not bad, 452, give or take a little bit. And now high and last above Friday's high, close to Thursday's high, and it looks like that's it. Looks like the lows may have come into place already just last Friday. And it now looks like we're going to challenge 476.25 and start to make new highs. Next stop, $5. 500, I meant. And 514.15, that area, 500 to 515 is a little bit of resistance. That's what I'm looking for the next overbought condition and rally highs. Next, wheat. You know it, bottom of the market, ER buy signal to the exact day, March 11th. We did get a bearish engulfing on May 15th. I said so last week. I also said I'm a little skeptical that that signal is going to turn out to be a good one because of the other grain market signals, because of the significant support area. Those are the two big reasons I didn't think it was going to go down very far. We're now approaching the high of that bearish engulfing sell signal on May 15th, and that high was about 696.75. We're at 90 now and a quarter. Not far to go to kill the signal completely. Not dead yet, but it looks like the signal's now going to be ruined. Keep in mind that it did go down the next day and the next day, Wednesday and Thursday of last week after Tuesday's sell signal. So there was plenty of room for a small, profitable trade there. Not very large, but definitely some money could have been taken out of that signal without a problem. Now we have losing positions if you're still short, and we'll see what happens next. I don't think it's going to work. I think it's going to make new highs for the trend. I think it stands a darn good chance of going all the way up to 800 and higher, and we're at 690. That is a huge move for wheat. Okay, let's look at cattle. It's almost reached my next resistance area. And I said so back approximately a 174-ish, and the date would have been May 14th. It would have been approximately the beginning of last week when I couldn't make a decision as to which way was up or down. But that day right there, the 14th, started to swing me in the bullish direction. Next day up, next day up, next day up, next day up. So I'm liking what I forecasted in the last 4 days anyway, but we're getting overbought and we're getting up to resistance. So it's going to have another downside correction very soon, down to 176, maybe even a little lower. And that is leading me to hogs, which had a bullish engulfing buy signal on Thursday. Didn't work. As a matter of fact, Friday was a doji and inside day and didn't go anywhere. Today we got lower than Thursday's low, the signal day's low, and it was a bad signal, period. Not good. Disregard those little blue dots down here. They don't mean anything. I'll get rid of those as soon as I can. Now we're going to go to New York markets, trade station charts, and look at the crude oil, energies, and then the remainder New York markets. Crude, we had a buy signal on May 8th. It worked for a couple of days, not much. We made a new low below the low of the signal day, killing everything on May 15th, which was Wednesday of last week. I'm still friendly because the signal looks like it helped turn the market. We have made a new high and a new high close since that signal, but again, it made a lower low in the meantime, so I can't claim it was a good signal. What I do like is the head and shoulder top. First shoulder high, March 19th. Top of the market, I'll take the middle of it, was, around April 9, 10. A little tiny double top, and I'm picking the middle date. I can't get an exact one. It's, wrong, odd number, whatever. But the last shoulder high was on April 26th. Broke the neckline, absolutely classic, big down day. Downside objective minimum 74.5. Been talking about that ever since probably April 29th. Today's high, I think, is the high. It's the retracement back up toward the neckline. No neckline breaks, no violation of the head and shoulder top basic rules. I don't have a sell signal, but the formation is causing me to believe that today's high is going to be a high. I think we're now poised to get below 76.68. And then the minimum downside objective 74.50, and maybe even lower after that. Next chart, high natural gas. Overbought, very much so. 86 is quite high. I'm expecting a top immediately, very soon this week, maybe today. Overbought conditions, close to previous rally highs. That is the first stopping point, 2.897. Maybe we can get up to 3. That is significant resistance. We just might shoot up there real quick, getting even more overbought. But anywhere from here all the way up to 3, if it can get there in the first place, I'm not saying it's going to, it might, but somewhere between now and 3, I'm expecting it to roll over and go all the way back down to 2.39. Next chart, heating oil. Bear trend, couple of buy signals worked only for a day or two. New lows, got oversold again at support. I like what I see, but there's too much resistance in this ballpark. We stopped a week ago, and then it looks like maybe we stopped again today around that 2.5 area. So a little lower on the day at the moment. Rally kind of failing, not overbought. Don't really have a lot of evidence that we're really going to start to turn down, except for the new lows from months just last week. Not oversold anymore. I think we're going to see new lows again without much more of a rally, if we have any more of a rally at all. Next, gold, silver, platinum, and copper. Overbought in gold, possible double top formation. May 20th today. Hasn't started to turn down yet. This looks like a good chance it might because of the double top, because of the overbought conditions. Don't go short prematurely. I'd love to see a bearish engulfing today and an official sell signal like we've got in platinum, show you in a minute, but not in gold and not in silver. Overbought in silver for several days now. No double top, went way past that on Friday. And even today, another new high by a substantial amount. I'm only looking for a downside retracement to 29.2 on silver, below last Thursday and Friday, which is a pretty good swing because of the size of Friday and today's rallies. Maybe down to about 26.30. That's the zone in which I expect this downside correction to get down to. 29.25 to maybe 26.30. Platinum. Bearish engulfing now, today. Was overbought for the previous 6 days. Now I've got my sell signal. The beginning protective stop, 11.05. That's the worst case I'm getting out. Now, because we've been well below yesterday's low, Friday's low, and we're currently staying around Friday's low, I think that my protective buy stop will have already started to work its way lower. It comes down on the signal day for day trade scalps and ER1 also position trades, as well as ER1 scalp trades, very, very quickly. So I think it's well below the high of Friday and probably even below the middle of the range of Friday. And we are short, I think, below Friday's low. Next chart. That's an official sell signal. We'll go back to it. Platinum, how far down? First stopping point, 1,021.22. Next stopping point, the approximate ballpark of 960. Okay, copper. We had a sell signal a couple of weeks ago, small profit, didn't work very well. Prime territory for another sell signal, not happening yet. Overbought conditions, very likely to top out very soon. Next, overbought, very likely to top out very soon. I'm sure I say that all the time when the market gets into overbought or oversold for buy signal conditions. So I'm waiting for a red, waiting for an outside down day, waiting for a sell signal in orange juice. Next chart is sugar the sweet. We have a bullish buy signal in sugar today. Now, this is not a very good place for a buy signal because there is, so far, still a very large head and shoulder top with sloping shoulders in this case. Two highs create the first shoulder, one of them May 1st approximately and June 20th. Double highs, slightly upward slanted shoulder. Double top or a sloping, slightly rounded, relatively flat top starting on September 15th until November 22nd, a bearish engulfing. So the last shoulder should be symmetrical, downward slanting, because the other one was upward slanting, and it is. Approximately the same duration time-wise, and it is. When it got to the neckline, it bounced off of it once, twice, which is okay. A little unusual to see it bounce off of it twice. But the next time down, on May 13th, it broke the line, stayed below the line the next couple of trading days, made new lows to the trend, and that was Thursday of last week. Today, we have a rally back up to the neckline. Now, that's okay, but it shouldn't go above today's high, especially on a closing basis. So it better have a false buy signal today, or it's going to go up and ruin the giant head and shoulder top, and sugar could easily go back up to 20, and I'm thinking up to 22.5. So the question is the buy signal good or not? And you have a very tight range to make the decision. Closing above 1719, it's going to go higher. Closing below 1790, it's going to go lower. And cocoa made a new low for the trend. Bye-bye double bottom. That didn't hold. We're trading at the moment around the previous lows in the last few days. No strength. Came back a little. Especially if we close below the previous lows for the last couple of weeks, we're going to go down, and I think we're going to go down. If it doesn't close there today, I think it's going to do it tomorrow, the next day. The only thing saving this bullishly would be for it to have a bullish engulfing today or close higher on the day than yesterday, Friday's close, something along those lines. Otherwise, it looks like it's going to go down. And it's going to go down to approximately 6,179 at a minimum. The next stopping point would be 5,621 and lower. Next, coffee. Double bottom is still holding. Friday, we made a minor upside breakout, and today we're still holding. Looks like it's modestly bullish here, looking for a little bit more of a rally. I think so, up to about 220. We'll see what happens when it gets there. Higher highs on a longer term basis. Extreme overbought. Big correction only came back to support area. Double bottomed out, starting just Friday and today to move its way back up. So again, I'm looking for 220 on the upside. Next chart is cotton, our last one. And we made a lower low last week, but a stronger close on that day. So we are seeing a little bit more upside follow through. We had one good buy signal, lasted a few days, not much. And then we made the lower lows. We've had some really good buy signals. That one was perfect on the bottom. That was great on that bottom. That was a great sell signal for a few days. That was an okay sell signal right there. We had a good buy signal down here. Several last year or so. And that's it. Back to the E-mini. It's hanging in there okay, not great. You have a great trading day. Profitable trading to you. Signing off.